Welcome back. You're still watching Business Morning on Channels Television, and today on the program we're looking ahead at the MPC's decisions. As we know, the Monetary Policy Committee of the Central Bank of Nigeria is meeting. Started its meeting yesterday and it's ending today. And at the end of its meeting today, we should get a feel of what the decisions are as regard key rates. Now, there have been so many suggestions, so many analyses on the possibility of what these decisions should be like. And as we also know, the markets have been trading cautiously, awaiting these decisions. Well, I've been having this conversation with an economic analyst, Gabriel Idahosa. He's still here with me in the studio. Mr. Idahosa, thank you so much for sticking around.
Thank you.
Well, just before we went on that quick break, I asked you if for instance, there was an adjustment in the Naira, for instance, would we see a stop in the decline of forex reserves?
Well, the decline of the foreign reserves is an arithmetic of exports minus imports, and whatever you have left, if it's positive, your reserves go up. If it's negative, your reserves come down. So really, if you adjust the rate and it encourages exports and discourages imports, you begin to get a positive balance of trade.
You remember the last time there was an adjustment, it was in 2011, but there was an adjustment from 150 Naira to the dollar to 155 Naira to the dollar. Now, if, for instance, there's an adjustment, say, from 155 to the dollar to 160 or 165 to the dollar, what scenario will play out?
Well, that's what we're trying to explain, that reaction to those changes takes some time. For example, when you have that change, it's going to take some time for us to, say as an exporter, for you to say, okay, I'll make more money from exports, so let me increase exports. It's going to take some time as an importer to say, the Naira exchange has gone up, it's too expensive to import, I'm going to reduce imports. Those decisions will take a while, 3 months, 6 months, 1 year, depending on who you are. If you are just somebody that flies to Dubai to buy goods, maybe you can take that decision in a day. If you are a factory that imports, you have to take a lot of time to decide how you restructure your manufacturing and import and produce, get some of your raw materials locally. So the reaction to those decisions take time. And that's why you do not expect the CBN or the MPC to take those decisions.
So it might not happen.
And expect an immediate result. So they are going to take decisions that are likely to have a potential effects over a certain time frame, maybe 6 months, 1 year from now. If they believe that, for example, when the CBN kept to 12% MPR for a long time, they were expecting the kind of results we got over the last 4 or 5 years of a certain amount of stability. And so if they are going to move any of those major parameters now, they are going to think of how long will it take for us to see the results. What is certain is that you're not going to see the results in April or May if you take any of those decisions. It's going to take time, but certainly the effect will come. If you, for example, move to 160, over time, 3 months, 6 months down the road, a lot of people will change their behavior as far as it affects foreign exchange. You probably spend less. If you used to buy a lot of goods from abroad for your personal use and you find the prices have gone up, you probably spend less. The exporters will try to export a lot more because they now get 160 instead of 155.
Yeah.
So it's going to have an effect over a certain period, 6 months, 1 year, but not April or May.
But based on where we are at the moment, is that going to happen? Is there going to be a likely price adjustment of the Naira to the dollar?
Well, in this MPC meeting, I'm not too sure they want to do it so quickly. They will take some of the options they have now. For example, they will look at obviously the public sector deposits. They will have to deal with that immediately. And then they will see if in the interim that helps to moderate the decline in the foreign exchange rate. But we have to remember that even at 39 billion, we are not in a very desperate situation. It's just that we have gone below what is described as the psychological level of 40 billion. And then the fact that it continues. I think that's the main concern, that it continues to slide. If it stabilizes and then starts going up slowly because, for example, we are able to increase our oil exports and our non-oil exports catch up with the decline that we have seen in the oil exports over the next few months, it's quite possible that if we, for example, if we can keep the reserves at about the current level of 39,
it's about 38,
39 for the whole of the next 6 months, and then we start to expect some increase, then there will be no reason to panic. The real issue is that it is declining, and that declining is not seeming to stop. So the MPC might say, okay, I mean, this is not the last MPC decision in the world, so let's wait till another MPC decision and hold on, take a holding position now, do the other things we can do, like the 100% public sector deposit, and then see how the other, again, how the fiscal side of the economy works. If, for example, there will be some restraint on the part of government to reduce their own pressure on the foreign exchange.
Yeah, because you haven't mentioned this since we started this conversation, and because you know, recently there was so many policy announcements as regards using dollars in terms of transactions and the rest of it, because it seemed as if all of a sudden we were dollarizing our economy, and then the CBN governor at the time, Lamido Sanusi, had to take some evasive actions to make sure that that stopped. And we're also coming up to 2015, where the general elections is going to be happening, and all of this, shouldn't they be looking at that now? Or is it too early for them to be looking at that now as they are meeting to take any decision as regards all what's happening in terms of the Naira and the dollar?
So previous MPCs in the last 2-3 months have talked about that. They talked about increased public sector expenditure that is related to the election. They've talked about part of the issues that came up that led to the suspension of the governor is public sector perceived extravagance and leakages in the system. Those are outside the control of the CBN. The CBN will continue to point out the fact that these expenditures adversely affect not just our foreign exchange, they affect our capacity to grow the economy, they affect our budget deficits that keeps growing, even though it's undesirable. So whether the government can adjust itself in the face of pressure from the incoming election. In any election anywhere in the world, you expect increases in expenditure, officially or unofficially. So it's unlikely that government can significantly reduce expenditures.
Well, let's just take this couple of comments that came in from our viewer at Salter Swan. Says, how long will CBN continue to defend the exchange rate amid deteriorating forex reserves? Can't the CBN do more than defending?
Well, that's the thing we have been trying to deal with. The CBN actually defends in quote. You can't defend the Naira really in the sense of saying CBN takes a position that I want the Naira to be 150, so I will keep defending and defending and defending and defending to keep it at 150. That is not the position that any central bank really tries to do. What the central bank has tried to do is to, you say like a pilot of a ship or an airplane, you read the weather, you see where the strong winds are coming from, you see the clouds, and you decide how you can maneuver your way through the clouds ahead of you. You don't know the clouds that are going to happen in 3 years or 6 months down the road. It's just the clouds around you. And so that's what the MPC is doing. The MPC is looking at what is happening now and taking those decisions they think can keep the Naira on course within this band. How long the CBN will do that, it depends on those external factors. It depends, for example, how quickly the government decides that it's time to fight oil theft and put the right energy behind it and stops oil theft. If the government stops oil theft in 3 months, perhaps MPC doesn't need to do much more. If we bring a complete stop to oil theft in 3 months, that probably will change everything. If we are able to significantly increase the local production of things like rice and cassava, and we cut down the billions that we spend on importation, again, CBN will not need to do more. So in terms of time frame, you can't put a time and say it is 2 months or 1 month, and then CBN should stop defending the Naira. CBN, we have to keep looking at all these parameters, as we said, like a pilot that is piloting the foreign exchange aircraft, and decide what measures to take as it goes along.
Okay. He's also asking that how can the CBN reduce the sell pressure in the bond market and the decline in yields?
Well, why are they selling? The foreign investors who came in had cheap money from the bond buying program in America and a lot of other countries. And so they found a very high yields in Nigeria, and they were buying. Now the Fed says we are cutting down on bond buying. So whether they like it or not, they must return those monies to their sources. So now CBN has no control over that. You are going to see that happening significantly. The question is if Nigerians or Nigerian investors can replace those that are moving out, that are selling. In terms of volumes, you cannot have sufficient capacity within the country from, say, the pension funds and the insurance companies to match what is going out. So the net selling off is likely to continue. People are buying bonds, some are selling, but the net sell-off will continue because those who are selling are more than those who are buying in terms of the volume of billions of naira that's involved. So again, CBN cannot stop you from selling your bonds if you want to sell your bonds.
Now, the next meeting after this one is in, it's supposed to be in May, and the new CBN governor is supposed to resume office in June. Right now, inflation rate is still in single digits, about 7.7% thereabout, and that's one of the reasons why we see further tightening of monetary policies. For instance, now, before the next meeting, what if we move from single digit back into double digit? What should we be expecting? Because it is imperative that even though they continue to tighten their monetary policies, they should bear in mind that the economy needs to grow. We said that at the beginning of this conversation. So, should they be making provisions in the eventuality that we move from where we are right now in terms of our inflation rate? What will happen to protect the economy, to serve as a buffer of some sort?
Well, between now and May, it's 2 months. It will take some miracle for the inflation rate to significantly move in this time. The reason is that what will make it significantly move? For example, if CBN now wakes up at this meeting or even at the next meeting, or gives a sign in between the two meetings, that MPR is going to jump up from 12 to 15 or 15. Some crazy figure. And then everybody, the banks increase their interest rates, everybody adjusts their prices, and then of course you can have that. But it's very, very unlikely. We have an MPC that seems to have got a good handle on how to manage those parameters. Even if there's going to be an increase in MPR, which is unlikely, it's going to be a very slight increase. Again, for the reason that you don't want to jolt the economy with very massive changes in a short time. So you are not likely to see inflation. And that's one reason why the CBN is holding on to the successes it has achieved over the 4 or 5 years. The CBN is saying, look, we've done well on inflation rate. We paid the price. Part of the price we paid was the high MPR, which everybody is complaining is not allowing enough credit to the economy to support growth. But we believe that the CBN believes that it's a good price to pay. It's better to have a low inflation rate, a stable exchange rate, and ensure that the economy will grow on the basis of being able to predict these key parameters than just to say because you want the economy to grow, let's reduce the MPR to 10% or 7%, and then you have inflation on your hands that is going back to the double digits. So that's what the balancing act the CBN has kept so far. And it's likely to continue to do that because the majority, in fact, including the president, acting governor, are part of the existing MPC. So they are going to continue to work on that basis that better to have a low inflation rate and what is considered a high MPR, and hope that stability, and of course it has encouraged a lot of long-term investments. A lot of the foreign direct investment that is coming into Nigeria is based on the fact that you can predict the movement in the currency.
All right. Mr. Idahosa, thank you so much for sharing your thoughts with us this morning on the program. And from our conversation, it's safe to say that most economic analysts are not expecting a change. Not anything drastic anyway.
If you say so.
But thank you so much for coming on the program this morning. It's been a delight having you.
Thank you.
Well, I've been speaking to an economic analyst, Gabriel Idahosa, and we've been looking ahead of the MPC's decisions. As we know, sometime before the end of today, we should know their decision on key rates. And just like Mr. Idahosa and most economists, they're not expecting any drastic moves, and they're expecting, although they're expecting an increase in the public cash reserve requirement, I beg your pardon, on public sector deposits from 75 to 100%, an increase in the CRR on private deposits from 12 possibly to 15%. But the MPR, that's the monetary policy rate, might remain unchanged at 12%. But if it does increase, then maybe we'll begin to see investors reacting either negatively or positively to that piece of news. But that's it on the program for today. Thank you so much for watching. I'm Harriet Agbinyi.